thoughts on the current market? The Fed, are they locked in a box? What can they do?
The broader macroeconomy story is that we're sort of late cycle. The economy was slowing very gradually, somewhat as a function of high rates eroding the strength of the economy even before the new administration. And then the new administration has implemented a number of negative growth policies related to constricting immigration and hiking tariffs, which are effectively just a tax on businesses and households. And that is, that slowed the economy in the first half. We grew at 1.8% in the first half, which is quite a bit lower than the sort of 2 to 3 that had been consistent in the few years prior. And so it's not surprising, given that slowdown, that we're seeing weakness in the labor markets, and from there, weak job growth. And the Fed, the Fed has a dual mandate, but anytime it seems increasingly that anytime there's a tension point between those two, the dual mandate, the employment and inflation, that they tilt towards, expressing concern about employment relative to worry about inflation. And so, the transition, there's a lot of noise around here, but in some ways it's kind of the same. In some ways, it's kind of the same thing that we saw last year, which is, everyone sort of says that was a big political move, but the unemployment rate started rising. I think smart people recognized that it was probably not persistent, but if you were sitting in the Fed shoes, you saw the unemployment rate rising, you were a little worried about it. Inflation was elevated, but not extreme. And so you cut. And that's basically what we're seeing now, which is the unemployment rate's very modestly rising, but also labor market conditions are clearly soft, and inflation's up, but it's not crazy high. And so why wouldn't you sort of cut into that dynamic? And that's basically what's happening.